Welcome to the week ahead for financial markets. Mike Smith, Senior Analyst and Head of Client Education and Training Go Markets, with you to lead you around what's happening over the next few days. And we've identified 5 market moving factors that could influence sentiment this week. Of course, we talked last week about the indices. It's in correction territory, the S&P 500 and the Nasdaq both there. But we did see a bounce last week, and the question is this simply just a man before the storm sort of retracement back to the upside, or is it a reversal? So there is some buying evident, but key levels could be under pressure. Let's just quickly have a look at the S&P 500. And you can see there's that significant drop right back into correction territory. We had that bounce during the course of the week, and as you can see, we've made our way back up to this level here at 56.78 on the futures contract. This is pretty important technically. We have had a rejection through that level, but nevertheless, if you look at Friday's candle, we did close at the top right beneath it. If we get a higher high here, we'll see some more buying come in, I would suspect. But if we start to see it drift back down towards this 55.23, then we could see more selling. Tariff turmoil continues with significant potential political fallout and reciprocal tariffs imposed from other countries onto the US. Mexico and Canada are in the spotlight this week. Their pause is just about done, and it'll be interesting to see what happens there, along with other tariffs, including the Chinese tariffs and those on specific goods. Of course, many central banks and the International Monetary Fund are expressing concerns about the impact of this on the global economy. On the data front, probably the most important data point during the week is on Friday when the PCE data comes out. This is the Fed's favourite inflation measure. And at this stage, we've got priced in a rate cut in June, potentially. If that comes in softer, obviously that might bring that forward a little bit. But it would have to be a significantly soft number to alter that, we suspect. But nevertheless, it may well lock in the prospect of at least 2 rate cuts during the year if it does come in soft. Gold has obviously breached 3,000. We talked about this as potential Monday. It didn't take very long to do that. But the question is now, of course, we hit 30.50. And do we have more upside potential? Is that enough for now? May see a retracement back to 3,000. If we look at the chart, you can see that retracement just on Friday, though we did come off the lows pretty significantly, suggesting that this was maybe profit taking on another great week for gold. 30.57 is the level to watch out for, and 3,100 is very possible at this stage. And finally, of course, there is on the 1st of April potential for a US government shutdown. We've written an article on this, which should be posted on the Go Markets website soon. But there are party splits on both sides of the House, which might delay some agreement. There was a short-term interim arrangement put in, which kicked the can down the road, essentially. Should we get a failure to reach agreement, we could see significant political fallout. Those are the 5 things that we're keeping an eye on this week. Of course, you can keep up to date every day at our live market update at 12:30 p.m. Melbourne time. And of course, we have our weekly education session as part of our Inner Circle program, which you're welcome to join in on. And of course, we're always here to help whenever you need to. Trade safe and see you again soon. Bye bye for now.